Hi everybody, Jen Berbas with the Berbas Group in Austin, Texas. Before we jump in, I just want to remind everybody that real estate is hyper-local, hyper-situational. So we're going to talk about some big picture numbers today, but everybody is having a different experience based on when they purchase their home, what their goals are, and where they live or where they want to live. So depending on where you want to purchase or sell, we're going to have different inventory numbers for that area. So for example, luxury condos in downtown Austin have about 14 months of inventory, which means it's going to take over a year at the current rate of sale to absorb all that inventory. And then you have situations like Circle C, Shady Hollow, which are much lower than that. So if you have any real estate needs, just call us so we can really dive into the details. Now we'll jump into the numbers. First, to start off with, total sales are up about 1.5%. That's nothing too exciting. Just kind of more of the same. Total under contract and pending was up 3% in August. We actually saw a little bit more of an increase in July. New listings up 2% year over year. That's about what we've been seeing lately. Active listings year over year is pretty incredible. It's about 14%. Every area has been so different with the active listings. We talked about it a little bit before. It's worth repeating. It really just depends what neighborhood you're in. We were seeing some sellers that have owned their homes for 20 years be incredibly successful in areas that have high inventory. Other sellers that have owned their homes for a really short amount of time in areas of high inventory are choosing to rent instead. So it really just depends when the home was purchased, how long ago it was purchased, and what the seller's goals are. Withdrawn and expired listings up about 4%. Kind of expect to see that this time of year, right? As we get into the school year, as we get into the holidays, people don't really want to sell their houses. And we're going to see more seasonality. We're going to talk a little bit more about seasonality in a second. Average sold price up 2.5%, tiny bit of increase. We're going to look at that in a second, stretched over a longer timeline, and pricing is basically the same. We've been bouncing along flat for a while now. Median sold price is up 1%. Average sold price per square foot is down 1.9. If we've ever talked about real estate at all, I cannot stand the sold per square foot price. I don't think it's really applicable in most scenarios because we have such high land value in Austin. It's more applicable in brand new construction if you're comparing apples to apples, and then of course condos because there isn't really a land component. This is that data that we collect about 12 miles from downtown in Austin, and the reason why we collect this on a weekly basis is we want to see the big shifts in inventory. We don't necessarily want to wait for the monthly data. So we use this as a dashboard to help guide our sellers about how the market's moving. There was one time earlier this year where the inventory level raised 20%, and we would have not really noticed that for about 5 weeks until the Board of Realtors data came out. So we were able to help some of our sellers get in front of that inventory increase and price accordingly, so they were more successful than the competition. We started digging into the metric of success rate, because what we started thinking about is what is the overall probability of a seller selling in Austin. So we looked only at single family, actually I take that back. We looked at single family homes and condos within 12 miles of downtown. Condos, of course, are pretty high inventory levels right now. So within 12 miles of downtown, we looked at condos and single family homes, and only about 35% of the listings that go on the market are selling. We looked at our metrics for that set for all of our listings as well, and we were at about 90%. So, of course, we're helping people that we don't think can be successful in this market come to their plan B so that they don't waste a lot of time and money on prep. If they want to rent, if they want to stay in their home, we're kind of doing that analysis for them up front so that they don't waste all of their energy. But we think success rate is a pretty good metric, especially in this market. 5-county metro average and sold price, you can see that it really hasn't changed that much over the last year. The pricing is remaining pretty flat. And then over the last 24 months too, there's been some variability, but in general, pricing is staying pretty flat. We've been bouncing along this flat level for quite a while now, for about 2 years. Pending units by month were up in July and August, just a little bit. We expect that to come down, of course, right? We always tell people that if you're not sold by Halloween, it's really a good idea just to wait until the spring. One of the reasons for waiting until the spring I'm going to go back to this chart. We like to put properties on the market right here before the inventory has increased on this blue line, and then when the buyers have already started coming back in, which is this orange line is pending the last 30 days. This blue line down here is what's gone under contract in the last 7 days. So as the buyers start coming back in and before the exciting inventory comes on the market, that's, all other things being equal, that's my favorite time to list a property. And so, right here where the buyers feel a little bit of stress because they're really not sure what the year is going to be like. All the inventory isn't out there. They're bored by the inventory that's been on the market over the winter. Really, I think that comes down to that. They're just not very excited by what they've been seeing over the winter. And then if you can be first to market, that's really compelling. New listings by month. Pretty much what we expect, this normal curve that we see. I feel like the last year or two, this has moved a little bit to the left. I feel like before COVID, this inventory chart was shifted a little bit to the right, May, June, July timeframe. Average sold price is up 2.5%. Are the prices in your neighborhood up 2%? Probably not. What does this mean? How can you accomplish this 2.5% and not have the overall market be up? It could be something as simple as it's just easier for people at higher price points to transact right now because that portion of the economy is doing better, right? There's a lot of different reasons, but I don't really see 2.5% as a big shift and certainly not a trend. On to some good news. Mortgage rates. We started the year at about 7.26. We are down to 6.29. More recently, probably in the last couple months, we came up from the high sixes all the way down to the low sixes. This is fantastic, right? It did not happen after the Fed announced. It actually happened before the Fed announced. Why? Well, the TNX or the 10-year traders can see all the same economic data that the Fed is going to be working through as they make their decisions about the overnight Fed funds rate. So the mortgage rates actually dropped before the Fed announced. Mortgage rates generally are between like 1.3 and 300 basis points above where the 10-year is trading. Right now, that's been lowered. At some point in the last couple of years, I think it was as high as 3 full percentage points over the 10-year. So if you really want to see where the mortgage rates are going to go, I would watch the 10-year. The ticker is TNX on your stock tracker. The 10-year traders are consuming all the same economic data that the Fed is looking at, and so they can kind of get in front of that. This is actually another piece of good news. We've seen now 3 months of an increase in year-over-year change of Indeed job postings. This is great, right? This means 3 months is a trend. And we hope to see this continue through the winter. But if you back out, you can see we still have a really long way to go. This is from January 2022. We hit a low sometime in November 2023 through the spring of 2024. And we're finally starting to see that increase. The increase in jobs in Austin is really what's going to spur, I think, our real estate market to wake up again. We were all saying that we were anticipating 2025 to be the year that things turn around. Just like after 2008, it took about 4 years for things to turn around. It wasn't until 2011 or 2012 that the Austin real estate market started humming again. And we were thinking that was going to be spring of 2025. Now we're all thinking it might be 2026. Thanks as always, everybody, for spending this time with us. We're always happy to dive into the numbers with you. If you have a specific situation you want to think about, or even if you're just kind of wondering if in a year or two you might buy, we really love educating people and talking about the process pretty early on so you can plan. Let us know if there's anything we can do for you.